I don't even know what you are talking about.
Is going on YouTube? It's Brendan from Market Makers. Everything is happening very quickly in this market cycle with record inflation gripping the world. Do you guys know why you watch this channel?
The world is changing so fast.
That's right, because the world is changing so fast. I'm going to give you the news, the updates you need in TA and trade setups to try to stay on top of it, because trading can be extremely frustrating. We all know this, even my buddy John Cleese. You know, I can't get away from John Cleese clips. All right, guys, let's go ahead and look at this. So yesterday we talked about Michael Burry dumped all of his stocks, expecting the next leg down is coming, as I am expecting, as a lot of the big guys are expecting. Looking at the Bank of England today real quick, then we're going to jump into the TA, guys. Bank of England makes its biggest rate hike rise since 1995. This is a joke, okay? I mean, this is real, but this is a joke, what they consider big rate hikes. The bank raised its key interest rate to 1.75 from 1.25. So they raised 50 basis points. The UK is now the first country in the West to have double-digit inflation. They're over 10% inflation, guys. The Bank of England is forecasting a 13% inflation by the end of the year before they start getting reductions. However, Citi is coming out saying it's going to hit 15%, and the Bank of England at least is being a little bit more honest, saying they expect the longest recession in the UK, which is going to last multiple quarters since the great financial crisis. So we don't need to get into all those details, but guys, I want you to be aware of that. If you really think our inflation level is only 8.5%, then you're not looking at food prices. You're not looking at different things. Argentina's at 71%, Turkey's at 80%, and they're cutting rates. They're cutting rates to try to stimulate growth. Most people don't realize inflation is always and everywhere a monetary phenomenon. It's not caused massively like this by supply chain. It is caused by all these countries printing money, having 0% interest rates. That's why they're all suffering the same fate. But you guys know this. And just the easiest case to make to your friends who don't understand economics, the easiest case you guys can make to your friends is quite simply look at the CPI. The Fed has shelter. Okay, that's your housing. They have shelter at a 5.5% increase. Every single real estate firm, every single hedge fund, the government's own metrics that track housing prices, housing went up at over 20% as a national average last year. Over 20%, the Fed has it at 5.5%. That's part of the reason you know these inflation rates are severely suppressed, okay? And the market is going to come to that realization. And let's go ahead and look at what's going on with Bitcoin. Bitcoin on the weekly. I don't like spending time on this because we do these shows daily. And as you guys know, you can't see much on the weekly candle. You have your 200 below you. That's what you need to know. You're on top of Wyckoff. Let's look at Bitcoin because you're getting some movements on the daily. I see a lot of comments, guys, people asking me in the comments. I try to answer everybody. I couldn't get to everybody yesterday. We had a ton of comments yesterday. People ask me, am I in this trade? Am I still in this trade? Where should your stop loss be? Couple of quick points. I can't give you trading advice. It's against YouTube rules. We have a Discord. If you want to come join our Discord, ask those questions of me there. Ask those questions to our professional traders and to the 11,000 people that are on the Discord. You can get a lot of opinions, okay? But yes, I'm in this trade. I told you I had an entry at 25K. We wicked it. This is not how I wanted to enter it. I wanted to enter this trade off a 25K entry with price breaking out like this, right? That's how I wanted to enter the trade. As you can see, it did go down. My personal stop loss is down lower underneath the previous wave structure, okay? This is not a large position trade because the bulk of my trade is going to be at it if we get a breakout, okay? This is an entry point for the trade to have some skin in the game. We are still intact here on the pattern. We're still intact here for higher lows, higher highs, but this wave where you are now, again, no sugarcoating on this channel, guys, because all of these are just trades, right? These are trades. You have to view these things as money that you are willing to lose, because that's what trades are. You're trying to trade high probability setups, and you're in a bullish pattern. The high probability setup here is, again, I want this to come up. You have that volatility contraction. I can't go over every single thing in every single video, or these videos will all be 30 minutes to an hour long. Watch yesterday's video, watch the day before's video. I really get in, 2 days ago, I got into where the markets are going, so you can watch that. I think that's the Get Out Now video, where it's the one with the fire on the house on the thumbnail. Watch that for the big macro market predictions. But yes, I'm in this trade, guys. I have a small position. I have my stop loss down under this previous wave structure. The idea being I want this pattern, the volatility compression pattern, to remain intact, get these tighter waves, get a breakout to some level. And then if we get a breakout, I want to add to my position, okay? But because Bitcoin trades 24 hours a day, I wanted to have some skin in the game so I don't miss a breakout. So yes, that's my take on that trade right now. And guys, looking at this again, everything is the same. Okay, everything's the same as yesterday. If you look at your volatility, still super compressed. That hasn't changed. Patterns intact. That's the important takeaways for Bitcoin that you need to know in the daily time frame. But the other key takeaway is you're on a clock, guys. You're on a clock. We've been talking about this the last few videos because the markets are all looking to top. I'm going to jump back to Bitcoin, but let's go ahead and look at a couple of things here you guys need to see. Okay, first of all, the DXY. This is why you watch the channel. What have we been talking about the last 2 days on the DXY? I told you this is going to move up. A lot of people, look, this is a really interesting thing in this space, right? There's a lot of guys that you guys probably watch that probably agree with a lot of my overall comments. The market will eventually go down. This is going to be a big bubble, a big crash. Lots of people agree with that, but you get a lot of diversions here on the strength of the dollar, the strength of metals, the strength of commodities. I'm just telling you guys what I see, and this is why I was able to predict this. What did I tell you guys the last 2 days? 1618, 107, spot 679. Look what you did. You broke out, okay? The dollar is going to stay strong because the Fed is going to keep raising rates. When this thing will collapse is when the Fed pivots. When they pause rate hikes, it could potentially go down, but when they start cutting rate hikes, it will definitely go down. And when will that happen, guys? Is the Fed going to cut rate hikes when you have 8.5% inflation, which is really like 13% inflation? Because remember, we match identically with the early 80s if you use the same CPI. So we really have about 13.5% inflation. Are they going to start pivoting like the market thinks, like the perma bulls think? Are they going to pivot when you have unemployment near historic lows, you have what they consider to be a hot market for employment overall, and you have a face ripper rally with the S&P only down 10%? No, this gives them cover to keep raising rates because historically, here's a market fact that you'll never hear on the big news media, a market fact. The Taylor rule, guys. The Taylor rule, which is what the Fed always operated on before, which says that you have to have real rates above inflation to control inflation and bring it down. What this Fed has done under Powell and previously under Bernanke, they're looking at things transitory, supply chain inflation. They forgot what causes inflation, which is money printing. Money printing causes inflation, and you have the government still spending like a drunk sailor, okay? The anti-inflation bill they passed spends more money. $40 billion a year more, and it raises taxes. Guess what, guys? People are like, yeah, it's the business taxes. Businesses don't pay tax. That's the hidden truth that you don't learn unless you actually study some economics, but it makes sense. Here's the analogy I always give. You have let's say you have a little girl in your neighborhood sells lemonade, okay? You sell it for $1 a cup. She makes 50 cents a cup because she has to buy the lemons, she has to put in the labor, maybe she has to pay her mom to help her make the lemonade, okay? So she makes 50 cents a cup. If the city comes along and says, hey, we're going to tax you 25 cents more, so you have to pay that tax, do you think that person's going to take a 50% pay cut off their net? No, they're not. What they're going to do is charge $1.25. It's the same thing. If you tell Apple you're going to pay $1 billion more in taxes, Apple just incrementally raises their prices on all the services and goods that they offer to make up for that $1 billion. So who pays the tax? You do. You do. Tax rates, tax hikes are not paid by business. They just increase the price. It's a virtue signal to the ignorant people that don't understand how economics work. Apple's not taking a profit hit, okay? If you raise Apple's taxes, they're raising the price of their apps, they're raising the price of the fees that they charge the vendors, they're raising the price of the products that they sell. You pay the tax. And they don't want to tell you that in the government because they want it to look like we're punishing these oil companies. We're going to do a windfall profit tax. The oil companies aren't going to pay the tax. The price of the good that they sell will go up. You'll pay the tax, guys. So just understand that concept. But this is where we're going on the dollar, guys. The 1618, 107.679. Again, this is very clear to me because we had the run up, the same run up in the dot-com bubble, the last equities bubble. We got to $1.20 on the US dollar, okay, the DXY. And we're going to go up again. And I wouldn't be surprised once we start breaking this previous resistance, you're going to see the markets turn down hard. Remember, crypto, equities, they don't like a strong DXY, which is why we are on a clock and this thing is moving, guys. You got some propulsion here. Let's jump back to the markets real quick and we'll finish up with crypto. Let's look at the Russell. Russell again nailed this top quadrant here below the 1618. We're at 1988. This is a trade that I am in as well. This is a trade posted in our Telegram, trade posted in our Discord. This is a short, and already we have price dissension. I expect volatility in the range, guys. You know what's really interesting is now you're seeing, back in 2008, I was working at an investment bank, and in the dot-com bubble when I was trading that, you didn't see a lot of individual analysts come out and say like, oh, this is, we're heading into a really bad recession. We're heading into what could be a depression. But now you have individual people at these big institutions saying something different. And I kind of feel like it's these big institutions doing CYA, right? For those of you in Europe, that's cover your, can't say the word, gets censored on YouTube. But that's what that is. They have like Mike Wilson at Morgan Stanley says, this is not a bottom, we're going down, right? Zoltan Posnar at Credit Suisse. The U.S. can choose between hyperinflation or a Great Depression. You have individuals, Jamie Dimon, CEO of JP Morgan, telling wealthy clients 50% chance we're going into something worse than a recession. Very hard recession or a depression, okay? But then you have CNBC, you have some guys on Fox Business, and you have Bloomberg, you have Wall Street Journal, and all you see is these bullish stories. You got Tom Lee at Fundstrat, buy the bottom, buy the dip. Jim Cramer banging his hand on the table. This is not as bad a market as you think. There's some really quality companies here. You got to look at these companies. That's what the majority of the media is. You have a 2-to-1 or 3-to-1 bullish bias stories being printed versus bearish stories, and it's always like that, guys. But what's interesting to me, as somebody who's been involved in the markets for over 20 years, is seeing some of these individual people actually being allowed to speak up. And I give them a lot of credit for doing so. Like Mike Wilson at Morgan Stanley, he's been bearish, but he says this is not the bottom. We got to come down more. And I fully agree with that. We can talk about the next big capitulation. You guys can watch my market video for where the markets are going. But this leg is nothing more than a rally up that will fall back down to some level of support. And for me, it's going to be that 50-day. You lose a 50-day, you're probably going to lose your previous lows. And this is why I'm shorting up in these quadrants here on these markets, okay? And the Dow pumped up above the 200 as well, and it's starting to roll back down. Again, 7 rallies over 20% in the NASDAQ and the equities bubble. Looking at the S&P, kissed the 200, fell back down using the 1618. Imagine that. Using the 1618 as support, you're trading at 42.75, 1618 at 42.71. Looking for all of these to retrace to at least close to the 618. And again, on the S&P, the broader market, 3,951. Guys, you want to know how how the consumer's doing? I forgot to update you on this yesterday. Target, right? So for those of you in other marketplaces, the U.S. has 2 major big box retailers, right, that sell multiple household goods, clothing, everything, food. You have Walmart and Target. Walmart does just under $2 billion in sales every day. Now, Walmart did a little sneaky trick. Walmart, what they did a few weeks ago when they were warning the Fed, that's why they revised their earnings for this quarter. They were warning the last quarter, they were warning the Fed they weren't going to make their earnings, right? So they revised their earnings, they lowered them, and then they hit the lowered earnings, and the market liked that. Target fell 90% in revenue. 90% in revenue. We had almost $250 million new credit cards issued, okay? Almost $250 million. I think it's the highest ever. We have retail credit debt going up at the second highest level ever. People are still spending the same, and that's what you hear in the media. The consumer's strong, they're still spending money. They're spending more money to buy the same volume of things. You're still buying the same things from the grocery store, but you're paying 15 to 30% more to do it. So yes, you're spending more money, but you're getting the same amount of things, and that's the disconnect you guys are seeing. People are hurting, they're taking out more credit cards, and U.S. consumer credit debt is going up, and the Fed will continue to raise rates. It's been my base case, guys. You know, I have not wavered from this, and as they do that, these markets will get to a point where they cannot stay at this level. The markets are expensive. The S&P is trading right now like 18, 19 times. It's expensive. Historically expensive as well, not just expensive now. These are going to come down more, okay? And you're going to build your top here. You may come back up for a double top, may even get some more wicks above your 200, but I do envision this coming back down, which is why I short these markets, guys. NASDAQ, same thing, got above the 233. There's your first hump of your double top if you do roll back up, and you may come up to try to test the 200. We shall see. Stocks 50 in Europe, following the U.S. markets closely, also rolling down. Not a coincidence, it's resting on its 45 angle from its all-time high, okay? Let's go back to Bitcoin. Bitcoin on the 8-hour, guys. Here we are on the 8-hour time frame. And the 8-hour time frame for Bitcoin, everything's still intact. Really, the only thing I'm looking at here is the 233, guys. The 233 is your resistance. It's an easier way to look at it versus looking at the weekly because you get more candles, but that's still your key resistance up there. Looking at the 4-hour time frame, you can see what you're using as support, using all your long-term moving averages as support. Now, if you notice the way I drew this mini-cough structure, you did fall from this mini-cough structure, right? But you're still above your previous wave lows. That's what you need to do. You need to stay above them. If you do not stay above them, not only are you breaking that pattern, this volatility compression pattern, right? If you don't stay above them, you're breaking the pattern, but you're also on the 4-hour time frame. Remember, primary downtrend, losing the 150, losing the 233, and losing the 200. Those would be above you as resistance. This is why Bitcoin is on a clock. We need it to hold support, make its move, give us that pump. Whatever that pump's going to, you guys know the targets we've been talking about. I have that first target up here with this trend line, depending where this is, roughly 27K. Then you start looking at your 1618 at 29, and of course, long-term target, if Bitcoin wants to mimic the other markets, come up to its 200, 233, you're looking at about 32 and a little bit of change, okay? That's what we're looking at. Let's see how Ethereum's doing. Ethereum, still have my drawings from yesterday. Let's get rid of those. You can see it's doing what I said it needed to do, which is come down and base. You got to base, got to compress your volatility, and if you are going to see a move, because look at Ethereum's a lot closer to its long-term moving averages here on the daily. This is a 150 to 233. You may get a little move, guys. Maybe you'll get a bigger move, but this might be the majority of the move in Ethereum. I don't know. You're this to get to the 233, you're at almost 2,200. Ethereum's at 1872. It is still a nice move. My recording controls are in the way. That's why I keep clicking over here. But let's go ahead and measure this move and see where it gets to. See if you got right from here. Let's say you got up to it's still a 16, 17% move. So that's still a really nice tradable move. Remember, on the daily time frame, this is a really nice tradable move, especially with leverage. But you need to hold this base. Your money flow is staying just on the median line. Got to hold this structure. Remember, this can form either as a cup that gives you movement up like that, or this can roll over, come back up, fail to break out, make you a double top, okay? Can go either way, but this is your key levels here on Ethereum. Looking here at the 4-hour time frame, you can see the 4-hour time frame, you just get more candles, but you need to hold that basing structure, and you got your 150 and 233 well below you, okay? Well below you. So if you did start to retrace, you could be using this as support down here at 1730 and down here at 1664. So that could be quite a decline. So you got to watch Ethereum as well. What is oil doing? Oil caught a little bit of a bid this morning, but again, Primary downtrend, there's your trend line still intact. It could come up to that, whatever that is, 92, almost 93. Could come up to that. Primary downtrend is there, guys. Gold as well. Looking at gold, there's your more capitulation in gold, okay? Gold's still falling down here. Might get that second wave up for this double top hump. Come back up, maybe back test the 1 fib at 1773, or come test this 618. Silver, same thing. Silver still struggling, still falling. The metals will fall when that dollar rises, guys. Key concept. Man, this video went long. All right, guys, enjoy the video. Talk to you guys tomorrow.